everybody, and welcome back. This is another Sunday sessions video with both myself and Luke. This is going to be for the week commencing the 15th, and we cannot wait to bring you the best investment opportunities we're seeing for the coming trading week.
So before we do jump into this video, just want to let you know that we do have a new podcast series that is out now. We'll put a link on this corner here. So go and give that a watch. Give us some feedback and let us know how we did. And yeah, let's jump into the video.
So first things first, I'm going to dive straight into the US dollar to Japanese yen currency pair. Now, you'll probably realize by now that this is one of my favorite markets to trade. I usually try and stick to the euro to US dollar as well as the US dollar to yen, just because they're very volatile markets. It's two of our 5-6 major pairs. So I usually try and stick to those as it has higher volatility and I just find it easier to trade. So jumping straight in, the first thing that I noticed was this break of structure here. That shows us a shift in the market's future trend. We now have to assume that bearishness is to come moving forward. We've shown that price wants to push through, break those liquidity lows. That's exactly what it's done. Straight after that, we came down. So we've had that correctional back up, that last wave down, and then this consolidation. Now, what does this consolidation tell us? We're basically manipulating people at the market, stopping the previous trend and creating a new one. And I'm going to show you exactly how this happens really quickly. So looking into this move, into this consolidation, the first thing that I'm going to teach you about is all of these lows. So all of these lows, they sort of hold a line. So around that 112.81, they sort of hold a level of support. They're all showing hesitancy to push through. And then before we move up and change the trend longer term, we have that liquidity grab. We have price pushing straight through with high volume. And then the major move upward begins. So watch out for this when you have consolidation ranges. Most people will see it as a fake out, but for us, it is a liquidity grab. Watch out for high volume being introduced straight after. So now I'll jump into exactly what position I'm going to be looking for in the coming week. So as of recent, we've had another sideways movement. We've put in the same thing. We've had those equal highs, that liquidity build up again. And then this move here, that high volume push through, we grab that liquidity with this move. And then on lower time frames, we do the same thing. We consolidate, change the trend, and we begin putting in bearish structure. So the reason I know this is from this break of structure here. This wick came to break through this. What that shows me is that we're now ready to run the lows, continue some bearish structure longer term. So what do I want to do? I want to get in on those sell positions. So looking at this, this is our wave down. So this is our major impulsive wave in this bearish structure, evident by the reversal here. And we've started moving up. So I'm going to imagine that we'll have some small amounts of bullish structure created just to trade up into this region. So this is my supply zone. Why is it my supply zone? A, because it is the final buy before heavy sell-off. And on top of that, once again, what have we seen? Zooming in. We've got the same thing. So we have built liquidity. We have got those equal highs. We've shown hesitancy for price to push through, and then a high volume push up clears that liquidity. And then we have that heavy reversal. So once again, anybody looking at this on lower time frames, they thought a level of resistance has been introduced. And what happens? We have that fake out, as people call it, and then the heavy reversal lower. What this tells me is that we've got clear institutional control in this region, which means unmitigated positions lie here. So this is going to serve to me as a supply zone. Now, because this is serving to me as a supply zone, I'm going to expect to take sell positions out of it. So I'm going to be hoping to get in on a sell position as soon as price taps into that zone with the stop loss just above. So that'll be about 8.5 pips. And then my take profit will be down at these lows here, targeting the next lower low put in the market. So this in total, we're looking at a 14.5 to 1. Of course, I will not enter just on price tapping in. I will wait for that lower time frame shift of structure to give me the confirmation that a sell here is valid. So now I'm going to move over to the AUD to USD currency pair, another one of our major currency pairs that I like to trade, like to watch, just because of that typical higher volatility. So I'm just looking from this low that we set in the market, this high we've set. We then got the higher low, the higher high. This confirms to me that we have bullish structure going forward. As a result, I've been watching the sells down in this position, hoping that price will trade down into this order block here. The reason I've gone for this is because it's our major down move before the major up move started. So once again, what we've seen here is the same thing that we saw on the US dollar to yen. We've had that liquidity build up. We've shown that support has entered the market at this level, and then we have that high volume push down, grab that liquidity, and then we begin the move up. Okay, so now we're moving down the time frames. I've gone to the 1 hour here just to show you what price was doing recently and how I was looking to trade it. So even though price has just tapped into this zone, I would like to see a deeper mitigation. And until this high is broken, this structural high is broken, my bias will not shift to bullish just yet. So at the moment, I'm trialing a new little bit of analysis with my strategy, which is called the 3-box strategy. It's just a way of analyzing the market using the strategy I did prior, but just doing it a slightly different way. It's something that I'm going to be sending through to the clients next week. So I'm going to be educating them on how they can do it in the markets. If you're interested, make sure you get in our learning lounge, as I'll do some previews in there. As for now, we just got to understand that this box, we're showing that last down move. We're expecting that price will find supply somewhere within this move down, somewhere within this last impulse. I found a last buy before sell, so I'm expecting this to be my supply zone and hopefully look for sells from this. Now, of course, we have something going against that slightly, the fact that we have tapped into this box. It could bring enough demand into the market to invalidate this trade, but of course, because of our strategy and our 3-step approach, we will be looking for entry confirmation in here. So if price does show us it wants to invalidate this, we will see that and we will not enter. So because I'm looking for that deeper mitigation, I would hope that when price taps in, we find entry confirmation, get in at this point, have our stop loss just at the high of the supply zone, and then ride it down into a deeper mitigation of this demand zone. So as a quick conclusion to my section within the Sunday sessions, I've come back to the XAU to USD, so the gold chart. And if you remember my analysis from last week in the previous Sunday session video, you'll know that I had this zone marked out on gold. So around that 1852 to 1870 mark, price has just traded into this after that heavy rally, did exactly what I thought, cleared that liquidity. We're holding in this range now, so if we find entry confirmation, we may be able to ride some sells down all the way to at least 1675. This would be a crazy trade because we're looking at nearly 2,000 pips, so if we can get a nice tight refined entry, the risk to reward returns on this would be crazy. Keep your eyes on it. If you see confirmation of sells, it's potentially a great sign for a longer term hold. So that rounds up my section of the Sunday sessions. I'm now going to pass you over to Luke, who's going to run through some of his charts, some of his analysis, and give you some of his best investment opportunities for the coming trading week. So thank you for watching my analysis, and I'll pass you over to Luke.
How's it going, guys? Luke here. I hope everyone's well. Before we jump into my analysis and run through what I'm looking at for the coming week, I just want to showcase some of the results from last week's analysis. And yeah, as you can see here, we are looking at the Great British Pound to US dollar pair. And you can see that we were looking for a break of this neckline here that I've drawn out in yellow. And we did jump on a position and we got a lovely return here. So that was posted in the group chat. And if you look at last week's video, you'll be able to see that I'd done the analysis for this, which was available before the market open. So showing a bit more detail on this trade, we can see that it was in fact a 61 take profit to a 12 pips stop loss, making this trade a lovely 4-to-1 RR. Now, with everyone at LAGFX, we always stand by using 2% risk per trade. So with it being a 4-to-1, it was a lovely 8% return on this, as we didn't take any partials on the way up. So this was a great position to start off the week for the week just gone. Just as added proof as well, what I'll also do is take a clip from last week's video and present it here in the following clip. Now, what are my thoughts for the coming week? Well, I believe that the Great British Pound is going to be strong this week, and I feel like price is going to be pushed up by the bulls. So, therefore, my bias is to buy into this market. Now, where will I buy? Well, what I will do is I will look for a break on this neckline here. So if we just draw this out, I really want price to break above this as this kind of gives me some confluence that price is still bullish and bulls are still in control, sorry. And then what I will look to do is find a nice entry above this point. If my risk to reward is correct, then I will probably ride it to this point here. So now that we've seen that, I'm going to jump in and do a little bit of analysis for the week coming, and just give you an insight on what I'm expecting the markets to do and what I believe is going to happen throughout the week. So yeah, we are doing some more analysis on the Great British Pound to US dollar pair. This is one of my favourite pairs to trade, like I've said in previous videos. And just looking here on the 4-hour time frame, we can see that we've had a lovely bullish market structure, like we mentioned last week. And then we've had the distribution phase here after it's tapped into supply. And now we've got lovely bearish structure forming. Now that's just looking at the 4-hour time frame, just to give you guys a bit of a better picture on the way the market's looking and the direction and trend. So now breaking it down and looking at the 1-hour time frame, we can really see this bearish structure. So it's producing lower highs and lower lows. And you can obviously see the trade that we took advantage of. That was a great opportunity and a great position that we placed there. And now if we look more to present time, we can see that we had a break of this demand zone. We had the retest and then price has come back down. We've then seen price push back up, again retesting, and now we seem to have had a breakthrough. Now I am still slightly in debate of what is going to happen, but I think I am more biased to a buy. So in which case I will be looking for a clear break of this zone going upwards, and I'd probably want my take profit to be somewhere around this supply zone here that I've marked out. Now alternatively, if that doesn't happen, then I will be looking for a sell position and a continuation of this bearish structure. Like I always say, the trend is your friend and you should always follow the trend. So unless I see a clear change in trend, it will be a bearish position that I'll be looking to place. But I am optimistic and I do feel like price could break above this demand zone. But if it doesn't, then I will obviously look for a clear position below this point, in which case my stop loss will be placed just above it, and I'll probably have a take profit set on a previous level of demand. So for me in this pair this week, it will just be a case of seeing exactly how structure plays out and seeing whether the bears or the bulls are in control of the market, and then that way I can dictate whether I wanted to place a buy position or a sell position. But it will most likely be from the break of this demand zone here. And as I said, I am more biased to a buy, as I feel like it could break and push up higher, clearing liquidity to the upside before coming down. But if I do follow one of my main rules, I should be looking at sell positions, as you should always follow the overall trend. Now, this is the only pair I have analysed for the week coming, just as I'm not really seeing too much in terms of the way I trade and my strategy that I have in place. So for me, it will just be a case of seeing how the market plays out throughout the week. But as always, if you do want to stay up to date with exactly what we place and exactly what we are looking at, then go ahead and join our free group chat on Telegram. Link will be in the description. And if you guys have any questions regarding my analysis today or James's, then leave it in the comments and we'll get back to you. And like I said earlier, we have got a new series, Trading Talks, the podcast. So go and check that episode out. It was a great episode that we did. The video has loads of useful information and it has more of a personal touch to it as well, as me and James really express how we got started in this industry and the steps we took to become successful in this industry. So on that note, I just want to say a massive thank you for watching today's episode, and me and James will catch you in the next Sunday session.